Hello, welcome to this week's live, everyone. Let's pull up the topic. Let's go. Is it tickering? Okay. Welcome to this week's live stream. Definitely wanted to let you guys know I already went live on Instagram and I forgot to go live here, but I'm here today. So today we're diving into a topic that can often feel like a guessing game for business owner, and that's estimated taxes. Like whether you're a freelancer, small business owner, mompreneur, running a side hustle, this information you do not want to miss because this is some good information. This is some good tea. So before we dive in, let's set the stage real quick with a story about one of my clients, a mompreneur named Kate. So basically, Kate is a mom of two and runs a thriving business. And she started her journey from her home kitchen, baking cupcakes during her kids' nap time. Her business grew quickly. Sounds like my business right now. Her business grew quickly, and she was booking more orders than she ever imagined. But here's where things got really tricky. While Kate was juggling her business and family, she realized she hadn't set aside any money for taxes. She came to me in a panic after receiving a letter from the IRS about underpayment penalties. Thank God she came to someone because a lot of people tend to let these letters pile up and ignore it. They're going to find you. So we got to work and I explained how estimating taxes work and how they can save her from stress in the future. So together, we reviewed her earnings and developed a plan to ensure she paid the right amount each quarter. Fast forward today, and Kate confidently handles her estimated taxes without any surprises. So if Kate can do it, you definitely can. Okay. So let's break it all down so you can feel just as confident. Okay. Starting with what are estimated taxes? So estimated taxes are payments you make to the IRS throughout the year on income that isn't subject to withholding, like freelance earnings, self-employment income, and even investment gains. So who needs to pay them? If you're expected to owe at least 1,000 in taxes after withholding, you're likely required to pay estimated taxes. Right. So this is common for self-employed individuals, business owners, and even landlords. Like the list, they just want everybody to pay these taxes. And it's really the reason why this is. Just remember, if you are a W-2 employee, you have a job, taxes are coming up every time you get paid. And we are a pay-as-you-go system. Our tax system for the United States is pay-as-you-go. So instead of it being you pay at the end of the year, they want you to be paying this throughout the year. That's the way the system goes. And as business owners, we are held accountable to do this for to the IRS. And just to be honest with you, all of as business owners, we're responsible for almost a lot of stuff because payroll taxes falls back on the business owner, making sure they put the right system in place to pay the payroll taxes for on behalf of their employees. So there's a lot of things and a lot of taxes we're paying because of this pay-as-you-go system, but being on top of it is going to make it a lot easier. So the next thing is, how do you calculate them? You want to start with your last year's income, deductions, and credits as a guide. So you basically want to review your prior year tax return to help you figure this out. And you're going to use the form 1040-ES to calculate your payments. And then the next thing would be divide your annual estimated tax liability by 4 to get quarterly payments. Okay, so the payments are set for quarterly deadlines. So we have April 15th, June 15th, September 15th, and January 15th of the following year. So once we do that, making sure we make our payments, this is going to help us avoid penalties because you're going to pay on time to avoid underpayment penalties. If your income fluctuates, consider adjusting your payments based on actual earnings. Okay, so I have a few questions in the inbox, so I'm going to put that up now. So what happens if I don't pay estimated taxes? If you don't pay your estimated taxes, you might face underpayment penalties and interest, unfortunately. And the IRS expects you to pay your taxes as you earn this income. So missing payments can lead to extra costs at tax time. The best thing I love to tell my clients is every time you bring in some type of revenue, $100, whatever it is, break it down, set up those accounts. You can partner with a bank that have zero checking account fees or whatever like that, or savings fees. You want to make sure you get one of those bank accounts. We are a partner with Relay. So Relay, we're allowed to open up 20 something bank accounts and we're not getting charged for it. And the beauty of opening up those accounts, you're going to set it up in like with different like it's like envelopes or whatever, and each account is going to have its own purpose. So you're going to set up this tax account, and then you're going to want to set up two tax accounts, because what I do is I usually set up a tax savings account, and then I would transfer all the money throughout the year for my clients. We throughout the time period, so every time they get paid once a month, we transfer money over to the tax account, and you want that to have an interest being earned in there, because you're going to earn some interest on that as well while you're saving to pay the taxes every quarter. So this is the way where you don't have to like, okay, well, this is due on this due date of this quarter, and now I have to come up with the money. The money's sitting there. It's also gain interest, and then you transfer it over to the tax checking account, and then you're able to, pay your taxes. And then the beauty is when it comes down to tax time, you're going to see exactly what you actually owe. You could either be getting a refund, because due to that, this is not us calculating based on your credits and deductions at the moment either, because things happen. You might have a baby, me, having babies almost every other year. Things are going to happen. You might have children, you might buy a home. So those things might fluctuate how much you really owe in taxes if you're a single member LLC or a partnership like that. It's going to fluctuate. But at the time of tax time, this is the best time, because now I have my clients that are coming to me that's already prepared. Like, okay, my books are ready, and we want to see how much. Like, we want to know if we're going to owe more, or if we hit the target, or if we're going to get a refund. So that's the beauty of paying this on time. It's like a little game. So you want to make this fun, right? The next thing is, can I adjust my estimated taxes payments if my income changes during the year? So you definitely can. So if your income fluctuates, you can use the annualized income installment method to adjust payments based on what you've actually earned. This ensures you're not overpaying or either underpaying. I've heard through the grapevine that there might be overpaying. They might also be doing overpaying penalties. Not too sure. Let me actually look that up. Let me see. Because I heard that they were going to start doing that overpayment penalty crap. So let's just double check. If you pay, according to the IRS website, if you pay more tax than you owe, we pay interest on the overpayment amount. Okay. And underpayment and overpayment interest rates vary and may change quarterly. Changes don't affect interest rates charged to prior quarters or year. So you actually could be winning, actually. Hold on. What is the penalty for overpaying estimate? There is no penalty by the IRS. So there is no penalty. I learned something new today. So keep in mind, however, while the IRS collects interest on underpaid taxes, it does not pay interest on whatever amount you overpaid. So basically, they charge you interest, but if you're paying them once again over, you're not going to get anything. So there's no penalty. It's just that you just gave the IRS some free money to play with for a while. That's basically it on that part. Okay, so I just want to make sure, because I was hearing that through TikTok and stuff, and we're just debunked that situation. So next question would be, how can I make sure I'm calculating my estimated taxes correctly? Start by reviewing, like I said, your last year's tax returns as a baseline. You can use the IRS Form 1040-ES or an online calculator to estimate your payments. And then the last thing you can do is always work with a tax professional to ensure your accuracy. You can come to Faith Accounting Consulting Services. We do offer that service where we can help you with your estimated taxes during tax time. We also implement that when we prepare your taxes this year. We would also provide you your 1040-ES, so you know what you should be paying throughout the year. And then we offer throughout the year, we're going to offer you services where we can review that 1040-ES and kind of match it to be more accurate. So you also want to make sure you look for those tax professionals. And if you can't afford it, don't sweat or fret. Try to find something that fits your budget. There's programs out there. Reach out to your chamber of commerce, contact the library to see if they know something, but reach out to local. You can reach out to the IRS and see if they can find somebody or advocates in their program that can help you with that. There's always something out there for everyone. And then when you're hiring tax professional, I always say the first thing you're looking for is their credentials. The second thing you're looking for is, hey, there is no overpayment penalty because there's none. I'll debunk that real quick. But you always want to make sure when you're hiring that tax professional that, yeah, their credentials are good. That's good. They have the experience. But the main thing not the main thing, but the other thing that you want to focus on is that whoever is preparing your taxes, that you have a sense of calmness, or you can vibe, or you guys can like actually hit it off, because you want to be able to, it's a vulnerable situation. Any type of money story, financial story, I always say is very sensitive. It's also very close to all of us because it's like our money. It's like personal information. Then you're providing us your personal information as well. So you want to make sure this person is somebody you trust. They're trustworthy. You definitely could open up to them. I feel like I'm going to tell all my actual accountants out there that are going to school right now, HU, Hampton University also. If you are out there right now going to school for a accounting degree, I think you should minor in psychology if you're ever going to be doing taxes, because we have to be able to we have to do a lot over here. We have to listen to people. We have to be empathize. So I feel like I'm good because I'm a Pisces. So I was great with not needing to take that psychology minor in psychology or whatever, but you should. That would help you a lot when it comes to preparing taxes. But at the end of the day, when you are doing a discovery call, that's another part. You want to make sure you're vibing with this person. You want to make sure that that person could teach you, or you can understand exactly what it is, and they can produce the information that you are requesting and explain it to you. Like me, I always say, I try to explain it to, like, if I'm speaking to my daughter that's in 3rd grade, where she's like, oh, I get it, and then she can repeat it to me. So that's how I am. I feel like we all should be on the same page, because I want all my clients to leave my office, and if I'm not doing taxes next year or something happens and they move on to somewhere else, that they know how to explain to the next person what's going on. So you want to make sure you can vibe with that person, whoever you're hiring to do your taxes, okay? But with that being said, because it's Friday and I'm tired, understanding estimated taxes is all about planning ahead and staying on top of your numbers. So if you've been unsure about how to handle them, don't worry. You're not alone. And because the tax system, this whole tax law is crazy. It takes a lot of time to learn this stuff, but at the end of the day, we just need to learn what's good for you and what you need for you to succeed and for you to be able to stay on top of the tax code. And now you have the tools to take control. So thank you so much for joining today. And if you need me and our services, you can always reach us at, is my banners here? Hold on. You can always reach us at hello@faithacs.com. You can also go to our website, faithacs.com, sign up for our newsletter. We send out all this information every month. We're going to send out in our newsletter what's due, the due dates, what's coming up, and we send any information that's important that's coming up, any new tax laws and news. We will always reach out to you and let you know what's coming up in the future. Email us if you want to set up an appointment, hello@faithacs.com. We are accepting new tax clients at the moment, and we're also accepting bookkeeping clients as well. We are going to be starting our membership program again, and we're going to be changing the time around. We're going to change some things around, but joining our membership will help anyone that's a startup, anyone that wants to be more hands-on on their bookkeeping. This is a program that's perfect for you, so you can join that. So just email us at hello@faithacs.com. Also send us a message whatever you're watching, LinkedIn, YouTube, Facebook, send us inbox us a message. YouTube, I think you just comment. I don't know how that works. But send us a message and we'll get back to you and reach out to you with a link to schedule a discovery call. And if you have any other questions about this topic, just put it down right here and I'll answer it. Like, I don't have much to do, right? Just raise 4 kids, run a business, and stay healthy, drink my water. But thank you guys so much and love coming here. Bye bye.